as the Fed prepares to meet next week to decide on whether to hike interest rates in the United States. CNBC Africa's Becky did ask billionaire Warren Buffett about his views on the potential interest rate announcement. Let's take a look.
They've never asked me to be a member of the Fed. Maybe they think I know anything about it, and they're correct. I've always thought they'd be slow just because of the effect on currencies around the world if our interest rates keep getting stronger when Europe is trying to keep them low. One thing you have to be a little careful about in GDP statistics, when we talk about earnings of companies, we're always talking this year versus last year if we say they're up 5%. With GDP, when we talk quarterly, we're talking about sequential. If you look at year-over-year figures on GDP, they're 2 and a fraction percent, and they've been that way quarter after quarter after quarter. But the quarterly figures, you know, when you multiply something by 4, little changes get multiplied a lot. So the seasonal adjustments, both of the current period and the last period, they can throw those quarterly numbers off a lot when you report sequentially. I think, in a way, it's better to look at them year over year. And year over year, we've been in the 2 and 2.5% range now for, I don't know, 6 quarters or something like that. So I would be a little careful in getting too excited about quarterly statistics in either direction, as long as you're looking at them sequentially.
So you think the economy is not necessarily as strong as the most recent numbers that we've seen?
I think we're still on that path we've been on for 6 years, where it's growing at 2 to a little bit better than 2% annually, and that's not a bad rate, but it's not a booming rate either, and I think that's about where we still are.
So it may not be a booming rate for the economy, but it's probably also not an economy that warrants 0% interest rates. I mean, that's a fire sale, that's an emergency sort of situation. Why not move off of 0?
They probably will. I don't know. I mean, but like I say, if our rates got substantially higher than Europe's, you know, I would not think that would necessarily be good for exports for this country. I mean, in economics, you can never just do one thing. There's always and then what. And I think the and then what of moving rates up substantially while Europe's trying to keep them very low could have some consequences down the line.
You think this Fed has a different job? Have things really gotten that much more global and kind of out of the Fed's control?
I think they have to think about everything. You know, I mean, that's their job, and they're looking at a lot of things that I'm not looking at, and they get better information, I'm sure, on lots of things. So I don't envy their job, and they've, to some extent, maybe by their commentary, they're sort of pushed themselves into something where they have to do a little bit something here. But I would not be terribly aggressive if I were in that position.
So there are some people who are in the camp of raise it 25 basis points and then back off and don't do anything for a long time, which is fine in theory, but the market doesn't know exactly what you're doing until they watch on a day-by-day basis.
I've never made a decision based on what I think the Fed is going to do near term or longer term. I mean, it just does not enter. When we decided to buy Precision Cash Parts, there wasn't one word of conversation with my partner Charlie or with our board of directors about Fed action.
However,
and the same thing goes with our purchase of Phillips Petroleum, Phillips 66.
In May, when I spoke with you and Bill Gates in Omaha for the Berkshire annual meeting, you both said that whether the stock market was fairly valued or not depended on what happened with interest rates.
Correct.
So if interest rates go up from here, does that change your perspective about the stock market overall?
Not if they go up 100 basis points. They go up 400 or 500 basis points, so that changes a lot.
But at this point, even if we were to see 100, like a
100 basis points is not stocks. If interest rates, if you guarantee me interest rates would be at 100 basis points higher than this for the next 20 years, I'd be buying stocks hand over fist.